Welcome to the About podcast. Here we explore your financial health in simple and easy to understand ways.
All right, well, welcome back to the About podcast, where we talk all things financial planning. And as always, my name is Jeremy Scott. I am one of the hosts here and joined ably, as always, by Roy Hucke. Roy, how you doing today?
I am wonderful. And by the way, my post-production person says she can't say my name without saying Hucke like cookie.
Oh. Now, to be fair, I got that from you.
I know.
I did not make that up.
It's good, though. People know how to pronounce it when you do it.
Yeah, and now I know. He's just always been Roy to me. I wasn't sure how that last name
Roy
went.
Hucke or Huck.
Yeah. Oh, I bet you get all kinds of things.
Oh, yeah, I get crazy stuff.
Oh, my gosh. All right. Well, as you no doubt already figured out, we're not alone today. We have another guest, and I always love it when we have guests. I think they make the best episodes when we have guests. We're joined by Leasa Magnuson, who is a CPA. Why did I just blank on what that is? I'm guessing the C is certified.
Certified public accountant.
Certified public accountant.
Although some people think it's, well, I can't say that. This is a church. No.
We do record in the church. Jesus is listening. Well, and we're glad to have her here today. Obviously, taxes are on people's minds right now, and we talk a lot about taxes on this podcast. Being aware of all the different ways in which taxes impact our lives and the different decisions we can make about them. So, Leasa, why don't you tell us a little bit about yourself, and we can start there.
Yeah.
Well, let's see. I've been doing this now for 26 plus years. 9 of those years have been on my own as my own firm, and before that, I was at a couple different local firms, just as their grunt worker in the back before I went out on my own. So I've been doing it a while. I like to think I know something about taxes.
How long have you had your CPA designation?
I've had my CPA designation since it was 9/11 that I got it. So what is that, 11, 12 years?
2001, 9/11?
Yes.
That's like 20.
There we go.
Years.
See, the years all blur together. Yeah. So I've had it for 20 years.
Oh, wow.
I took it back when the CPA exam was, you went down to a classroom for 2 days and you sat in that classroom for 2 days and you took the test. Now you get to do just each part separately. But back when I did it, you did all 4 parts in one sitting. So what you're saying
is you did it the hard way.
I want you all to know I did it the hard way.
I bet you did.
I'm an old dinosaur who did it really hard.
Can you give us just that brief overview of what a CPA is? Because there's different people that people might engage, especially around like having your taxes prepared or anything. Roy and I were talking a little bit on before we were waiting at the door today, and my son took like a tax prep class in high school that, technically if he'd gone and taken a little test or something would have let him help people with very, very basic kind of tax stuff, but obviously like that's one end of the spectrum, and CPAs are on clearly very much the other side of that.
Right. So a CPA has gone to school and has at least a 4-year degree. And we take 40 hours of CPE every year. It's mandated by the IRS. So the IRS watches us a little bit more.
40 hours a year?
Yeah, 40 hours a year I take continuing. Yeah. Mm-hmm.
Wow.
Mm-hmm. Yeah. In tax.
Wow.
It's a little boring.
So it's a really exciting week.
Yeah, it's very exciting.
But, there's like over 70,000 pages to the tax code. So there's quite a bit to learn.
Sure.
So the 40 hours, I guess, isn't that much. They mandate that we take that much. A CPA can represent you in front of the IRS. So like the person that just takes the class and just can do tax prep work, they can't help you when the IRS comes knocking. You've got to find somebody that the IRS says, yeah, we'll listen to them.
Okay.
So, and a CPA usually, these days, most CPAs are more in the audit field where they come in and they audit the business books. Mm-hmm. Less of us are in the individual world where we do individual tax returns, because you can have an enrolled agent do your tax return. You can have just an accountant or just an accountant, a bookkeeper that does your regular bookkeeping. Sometimes they will do your tax return at the end of their season when they've finished your books for the end of the year. But a CPA, because we are mandated to have that 40 hours, we're a little bit more current on the rules. I have a couple bookkeepers that do tax returns, and every now and then they get caught they didn't know they had to do it this way or that way, and I'll send it back to them and say, I need you to do it this way. And they're like, oh, what is that? And it's a new rule that's out that we have to follow.
Oh, okay.
So being that I worked for credentialed wealth advisors, having a credentials is important to me as well. Being my CFP designation,
Sure.
Julie and my partner's CFA, and a CPA are typically who I like to work with for tax professionals for clients.
Yeah.
And I've run into some good enrolled agents, and they just don't want to, or they don't even have the 4-year degree. They can't get it done, and they're very knowledgeable, but there's nothing wrong with them. But it's again that scrutiny over making sure that you're up to date on what the latest information is. And that's a lot of work, 40 hours.
Right. Well, the nice thing about anything when you have a credentialed thing for lay people like myself and all this, like I would not know how to necessarily vet a tax professional and what makes a good one versus a not good one, other than maybe reputation and Yelp reviews, things like that. So, I mean, being able to say, okay, if it's a CPA, then I know there's at least this level of, education and hopefully quality to the work. I mean, I think there's value there, even for those of us who don't maybe even get the nuance of it.
Correct. And that's the value is a big thing. When clients come in, I kind of like to know they know there's value behind my CPA designation. There's value behind what I'm doing. I'm not just whipping that tax return out as quickly as I can for the least amount of money. So if somebody is just looking for that, how much do you charge? They want the least amount. Then they probably are better suited to an H&R Block or a Liberty Tax kind of situation than a CPA that's going to look at it and be like, okay, if you did this, this, and this, you could reduce your tax liability. If I can't reduce their tax liability, maybe I'm setting them up for retirement. I want you to not have to work until you're 90 or 100. I'd like to see you retire and have something to live off of. So I'm looking at those kinds of things as well.
Yeah. Well, and I can tell you from personal experience, H&R Block isn't necessarily all that inexpensive. You can get some pretty hefty bills out of those places if you're not careful, in what you ask them to do or not do.
So you didn't say the name of your business.
Oh, I'm sorry. I own NoCo CPAs, and it's out of Fort Collins.
Fort Collins, Colorado, for those of us that aren't in Colorado.
The beautiful state of Colorado.
Yeah.
Yeah. So what makes, in your mind, what makes somebody a good candidate for needing or wanting to use a CPA? I imagine if I just have a couple of 1040s, I work one job, that kind of stuff, maybe a little less necessary. But is there somewhere, is there a level of complexity where you feel like, okay, you've crossed the threshold, you really need to be looking at, using a higher level professional to do your tax prep?
I think that business owners, whether it's just a side gig that you have with your W-2 earnings, or you have rentals maybe, or you have complex 1099s that come from financial advisors, those are kinds of things that you maybe want somebody besides yourself or TurboTax looking at. I have a funny story about TurboTax that I just did this week. In Colorado this year, or last year, 2023, there was that Tabor refund where everybody got the $800. Well, TurboTax had a glitch, and they didn't give you that $800. And Colorado knew about it, but because TurboTax was doing it, they didn't automatically give you the $800 either. And so I have clients that did, they're coming in now. They had their TurboTax and they missed out on $1,600 because TurboTax had this little issue and they didn't know enough about tax to know they should be getting that $1,600. And it's gone. You can't get it once you filed and not received it.
Oh, no. I got mine.
The odd thing about
you
it
didn't
is
use TurboTax, obviously.
Actually, I did.
Really?
Yeah.
Oh, good job.
I wasn't going to admit that. I was sitting here thinking, should I admit TurboTax? I'm not going to do that.
Yeah, they fixed the glitch, but this poor lady did it earlier, and she couldn't get that money back.
Oh, I procrastinated, so there we go.
So you got lucky is what happened.
Yes.
Yeah.
I got lucky.
Yeah, so.
Wow. So to set the table a little bit for everybody, one of the reasons I wanted to have you on, especially this time of year, is that I have a lot of people ask me right now, like almost everybody, hey, Roy, who do you have for tax professional you would recommend? I was like, well, that one said they're not taking new clients. That one said they're full. That one said they don't take new people during tax season, which is happening more and more.
Oh, right.
So the question is, I really want to help people understand, like, the tax professional world is not growing, it's shrinking.
Yes.
They are retiring because complexity is going up. So when you have 40 hours a year to keep your CPA, right? And you're like, geez, I've been doing this for 40 years. I'm really kind of tired of it. Well, I'm just going to hang it up and be done with it. So you're having more people step out of that. Not only that, it's just demographic, right? Age of workforce. So that's creating less and less folks, but also we're not seeing a ton of new folks getting into it.
Nobody wants to do it. It's kind of,
Really?
There's a short amount of time to do a lot of work when you think about it. You have February 1st to April 15th. That's 2.5 months to do all the tax returns. So when I talk about a procrastinator to me is somebody that waits until March 15th to do something due April 15th. Right. Because the first part of February, I have a 2-week turnaround. I can get them in, you bring your stuff in, and I have it back to you within 2 weeks. Sometime around the first part of March, I'm running 3 weeks. And by March 15th, everything I have in the door, it's going to take me until April 15th to get done. And I'm kind of tired by then. So if you call me on March 15th or later, I'm going to either tell you I'm full and I can't do the work. So to get in the door, you have to have, you're going to have to be like, look, I'm sorry, I'm late. I know I have to file an extension. Is there any way you can help me, in May or June, file my tax return?
Right.
And to be crystal clear, I try not to call any of my CPAs after March 15th.
I bet you don't.
Yeah, it's a little rough out there. And that's one of the reasons, like, I think it is not appealing, because you are working really, really hard, really long hours. It's short and intense. You get a little bit more time maybe throughout the rest of the year, but that's becoming less and less too, it seems like.
Right, because I will have some people, I have some clients that I know are going to be my extensions, and I love those people. I know in February, I take a look at their tax return, you're going to owe this amount, and they're off my desk until July when I finish them. But a lot of people want that April 15th. They don't want to miss that date. I've had people offer me extra money if I would do it for them. And the struggle is, for me, is I do the tax returns first in, first out. I like to keep order. I know when you came in, I want to be fair to all my clients, not just those that have extra money and are willing to double my fee in order to get it done by April 15th.
Yeah.
I mean, the money's nice, but I have these other people that they got their information in early or on time for me. Why should I not?
Yep.
Why am I bumping you and making them extend?
Right. I think the thing for people to know, I mean, the news to me, in this is that, it's much more competitive. I mean, as far as finding somebody to do it, I mean, the competition is almost on the client side, not on the servicer side. If we got more people and I imagine we got also more complicated situations. You got more gig workers. You've got, you got people probably with more interesting, I got a job, but I'm delivering Uber Eats on the side. And, I've got, expenses related to my, car as far as that goes. I mean, I imagine that the level of complexity with people working, instead of just working one job, especially younger people working multiple jobs, and some of it is, probably like getting more gig work. So maybe that's, I don't know if you can do 1099s anymore, but, maybe that's 1099 versus, that kind of piece too is, people's situation. My guess is they're getting more complicated. That's my guess. I don't know if that's true, but
depends on the state too, for what you were just talking about. But that's actually a great question too, for the complexity of multiple state people.
Oh, yeah. Multiple states are really a problem now, and you've got the internet, and you can sell your widgets online.
Yep.
And does that mean you have to file one in that state? And a lot of times the rule comes down to how many widgets. So if you've got lots of small widgets that you're selling for 50 cents or $1, but you have huge volume, that kicks you into having to file in that state, and you've got to know which state you sold that amount of volume to. And do you have to file? And that requires, did you register with that state to do business in that state? So the whole internet has just opened up multiple states, and every state wants their piece of the pie. Right. So they're getting more and more aggressive about, yes, that means you're doing business in my state. You need to file one in my state. You need to pay me income tax. Sometimes you end up paying double tax depending on how the state rules go. You live in Colorado, so you've got to pay Colorado income tax on your income earned here, and you have to pay income tax on your income earned in the other states around here if you're driving back and forth to the other states to sell. And if you're doing internet, it's worldwide then.
So let's say you have a very popular YouTube channel and you're making money off of that, and it's coming from across the globe. Who knows, right? How do you deal with that?
It gets really sticky in terms of where it's viewed.
Whatever are you talking about, Roy?
So it becomes sticky, like I said, and so it's where the money is earned, and so we have to look at where the funds are coming from. Were they earned in the state of Colorado because you were here when you were doing the YouTube video? Or does that state not, or does that country not care where it was actually earned, but the fact that it was sold in their country or in their state qualifies it? So if you're just doing domestic, that's 50 states, and then you get into countries and you have foreign tax credits, and it gets a bit complicated. And
It can. So Roy's talking about me. I have a YouTube channel. It's not super popular, but I make a little bit on it, and it's all camera reviews.
Trying to build you up.
Thank you, man. Founder development. Not that anybody cares. If you're interested in a camera review, but
Is
honestly,
that a paid promotion?
Sure. In kind. But honestly, where the money really comes from is in the Amazon referrals. And I ran into this on that one because I started to get Amazon referral credit. You get a commission, and I got people in Canada started to buy it, and so it's like, sign up to do get your commissions out of Canada, and it wasn't enough money to worry about. And I'm like, I don't think I want to do that, because I was like Googling, like, what does taxes look like, and how does that work, and I could not find a good answer. I'm like, I don't care. Like, I just opted out. I'm like, I don't care. And I've got the same thing in UK. I've made some sales in the UK, and Amazon like, do you want your money? And I'm like, no, like, I'm good. Please don't, because I don't want to. I don't want to figure that out. Right.
And most of it is dollar based.
Yeah.
So at some level you don't owe Canadian tax, but Canadians have like, if it's running under an LLC, there's a different way to tax you as opposed to if it's just you on the side personally doing it.
Boy, what I'm hearing is a CPA is much more knowledgeable than TurboTax.
Well, yeah. You're not wrong.
So we have the situation where we have less CPAs. We have not a lot of people entering into the workforce. This is really important that people come to me and they're like, what do I do? Who do I talk to? They don't like their current CPA for some reason, or their CPA retired. How does somebody position themselves to look appealing to you, so that if you come to them, hopefully before tax season, everybody, that's step one.
Yeah, step one: don't come when this podcast drops, because I'm doing
too late.
Yeah, it's if you're listening, even if you're listening to this day one when this podcast drops, you're too late.
Just extend right now and go ahead and engage someone like Leasa to have that extension, and then do it all after that.
Correct. Yes.
Yeah. So how do they position themselves? Like, what are you looking for as a CPA to take someone on? What is a red flag? And what is someone who really is like, they don't really need a CPA. They need to probably use the TurboTax-esque service.
So things I look for when people come in and we're doing that initial interview, I know they're looking at me. Do they want to use me? I'm looking at them in terms of what is my risk in handling them. So if they come in and they want to know all the little ways to push the envelope, step over the line, and delve into the, for instance, like the Augusta rule that's out there, and you can rent your home out to somebody else for the going rate. Consultants usually tell you is something around $2,000. Well, there is the Augusta rule. And if you are in a state where the Super Bowl is, or the golf tournaments are, you can probably get the $2,000 a night for that time of year. And
does Augusta refer to the golf club?
Yep.
Oh, okay.
It came because people were, when they came in for that Golf Masters game, people were renting their houses out for a couple thousand.
Yeah.
a night, and they were getting it. And under the Augusta rule, you don't have to pay income tax on that to yourself if it's under 14 days. And it
so
has,
like if you're doing like Sturgis bike rally or something like that, same concept.
Same concept. If you're renting your house out for some event like that, well, some of the consultants have just blown it up and said you can do that for anything. And so they tell people they can rent their house out for less than $14 a day to themselves. And people are doing things like, well, I'm going to have a meeting at my house and I'm going to have some clients here, or I'm just going to call my clients from my house and I'm going to pay myself this rental fee. It doesn't work that way. In this area, your home goes for maybe $350 a night if you have a really nice home and it's on the lake and that sort of thing. So there's variables to all those rules you hear about. So if I have somebody come in and they say, well, I did the Augusta rule and I did XYZ that I heard about in the coffee shop or I got from some consulting seminar I went to, and they're all very aggressive stances, I'm not going to really be excited about taking them on, because when I sign off on your tax return, I'm saying these things were all legal and good with the IRS. And if you're pushing the envelope, I'm much more susceptible to an audit. And really, I don't like to go toe-to-toe with the IRS unless I'm going to win.
Right. Well, because it's not only that as a CPA, not only can you represent the person, in front of the IRS, but is there an obligation to, if they get audited, if I work with a CPA and
if I've signed off on it,
you signed off on it,
and I'm a CPA, then I am called in to the IRS on what I signed off on. Why did I do it this way?
Okay.
So I have rules and obligations I have to fill out when you get audited, as well as you.
Yeah. So there's some liability that you take on in this. So I can definitely see wanting to make sure that you're not doing people are being.
So if I sign off on something that's a little bit aggressive, then they're going to pull all of my client list and take a closer look at everything I've done to see if I've done that consistently.
So then it's just not one audit; it could be multiple. Okay. Okay. So don't be pushing the envelope.
Don't be pushing the envelope. Don't be coming in and have a gig work and you're like, I made $10,000, but I only have 1099s for $1,000, so I only want to claim $1,000 in income. That's a real red flag to me, that you're not going to claim all the income you earned, only the income you actually got a 1099 for. I expect you to be honest and tell me what you've done, and I will try and help you work around the IRS rules. I don't want you hiding things from me.
No. Yeah, there is a nice thing, and the nice thing that YouTube and Amazon both provide you with very good tax documents and a lot of great documentation on exactly how much you made. So, I try to stick with it.
They're going to get every dime they can, so they're not paying it.
Yeah, exactly. Yeah. Oh, yeah. They need to document that they paid it to me because they want
right.
They want to write it off.
In order for them to get the expense, they have to pass the buck on to somebody else.
Yeah, and they report it. So
yeah. So I'm looking to see if you like to skirt the law.
Yeah.
I'm looking to see if you understand your tax position a little bit, and so you are prepared. Like, you've brought in all the tax documents you have. You know that you have 3 accounts with Roy, and you've got 3 accounts over here with this other guy, and you've brought me all 6 forms, or about all 6 forms. I don't, when you come in and you say, I don't know what I need a little bit of guidance from you. I can't imagine everything that every person could possibly have. So I need you to understand somewhat. I have this account. I think it's a tax issue. Here's the information on it. And then I can dig around and say, yeah, I don't need this, or I need more from this.
Is there something that you see that complicates people's tax situations that generally people are not aware of, that it is as complicating as it is? I mean, I know we talked a little about gig work, clergy. As a pastor, I can tell you that our taxes are interesting.
Yes, they are.
And
they are.
Yeah, it's going to be interesting this year with both of us being clergy. I just got remarried. So we're both clergy, so that's going to be fun. But is there other situations that are people come in and are surprised that there's a extra complication around, like renting your home, like we already talked about, or things like that?
There are complications to do an Airbnb and renting out one bedroom of your house. Some people do just one bedroom. Some people do a floor. The most surprised thing that they're surprised about is there's depreciation on that. And some people are like, well, if I don't take the expense, I'm not reducing the value of my house. So I didn't take the expense. So when I go to sell it, I have a larger cost basis for that gain. And the way depreciation works is whether you took it or not, it's deemed to have been there. So if you didn't take depreciation on your house for the 10 years you rented out the basement, and now you want to sell it, the IRS is going to figure out 10 years worth of depreciation and reduce your cost basis before we calculate the gain. So it's deemed whether you took it or not.
Right.
It's not an option to take depreciation.
Okay. So where that comes into play is, depending on how much money you make, the IRS may think you made more money than you think you did. Because you may say, well, I bought the house for $500, I sold it for $700, I made $200. The IRS is going to say, what you rented the basement for 10 years, we're depreciating that. So you might have bought it $500, but we only consider the value at the time at $450 or whatever.
Yep.
And now I've got that extra chunk. I didn't get that money, but I have to then take that.
Correct.
And that could push you over the limit of, I can't remember what's the limit now on.
So a married couple gets to exclude $500,000 of capital gain, and a single person gets $250,000.
Right. But in Colorado real estate, it's not.
It's not unheard of to go over that, and then we have to go through and, okay, did you?
Within the last 4 years,
right.
The numbers have gotten really crazy. But yeah, every client I have, I'm just, hey, make sure you're tracking all of your expenses and
right.
So you need to keep
CPA is
track
aware
of, your landscape improvements, and you put new carpet in here and you redid the cabinets here. You need all those costs to reduce how much that gain is typically here in Colorado.
Yeah. Okay. Wow. Yeah, I would not have expected that.
So you just got a new home.
I did.
Jeremy, are you tracking your costs?
We are because we have to because housing is treated different for clergy. So I just moved from the parsonage across the street to now I'm getting a housing allowance. So it's a different kind of thing. But you track all of the expenses that are allowable under the housing allowance, which includes, home improvements and things like that. So yes, we are good at tracking that. So I will have all that when the time comes. If somebody wants to write me $1 million check for my house,
guaranteed, right?
Yeah, we're good. Well, but it's funny because she's excluding some and I'm excluding some, and it's just like, well, wait a minute, and then you have to be able to document. I can't just say. I got to be able to document that says, I am excluding $25,000 of my salary for my housing costs. I have to have housing costs that equal that money. Otherwise, I don't get to exclude it.
Yep.
So, yeah.
So red flags, people that don't tell you everything, that don't show everything, they want to cut corners. So who is someone that you just said, it doesn't really make sense for you to work with someone like me?
A lot of times it's the elderly that just have a 1099 and they don't have a W-2. They're living off of Social Security, and they have they have a little bit of investments, but it's really not a lot. There are some free things out there for them to go to. I usually give them the option when they come in. Hey, there is, it's called VITA, Volunteer Income Tax Associates. I'm not sure what that A is for, but it's through the college and it's through the senior center. Mm-hmm. And I will usually let people know, hey, you don't have anything here that warrants paying me to do this. You should go here. But the senior population, they don't trust the volunteers. And so
they don't trust free.
Right. And so they will usually pay my fee. I've had some go and they're like, the line is huge. I don't want to stand in that line.
I'll just pay you.
I'll just pay you. So there's some things like that. And I always feel bad because really they could do it themselves if they understood the computer on TurboTax. So those type people really don't have any need to come see me.
Yeah. Yeah, I know the IRS is apparently developing their own tool for doing it online.
They do have a free one online.
They finally changed the law that lets them not. I think there was a law that says they couldn't do it, which I always thought was a weird like we made a law that says the government can't help us. Like that seems odd. But yeah, I think they're doing that. But it also assumes that people are comfortable getting online and putting their information online. And I'm like, my concern with that is I think the exact people you're trying to serve with this are the ones who are probably the least likely to use it. Again, other than like my son, who's got a W-2 and that's about it and stuff. So he'll go online and do it just fine, and he likes it. But I don't know. I worry about the seniors. I'm like, I don't know that that's even helpful. Because, they are cautious, especially about putting their personal information online. You can't do your taxes without putting a lot of personal information in.
Mm-hmm. Right. And so you're at a public library if you don't have a computer and you're entering in all that stuff and you have all those documents sitting in front of you. And it's just not a good idea. And right. I'm not really fond of the IRS anyway because they are really antiquated in their software and their computer skills.
What?
Like they're still writing in, I can't remember the language that it's called, but there's like 6 people that can write that code right now, and they're all 70 plus. So
all their systems are in COBOL.
Yep. Their systems are really, really old. Yep. And I guess that means that might make them harder to hack, but I still have lots of people coming in with fraud-related issues. And so I'm not sure that signing up to do it I have to have things in place for my online practice.
Right. So before I was a pastor, I was a software engineer. So my undergraduate degree is in computer science, and I had a class where they taught us, the class was teach you like a little bit of all of the very antiquated languages that they used in the 60s, 50s and 60s and 70s. And really the pitch was you'll at least know what it is in case you want to go work for the government because they're still using all this stuff. Nobody else is, right? Nobody else is. But it basically was in like a history of computer science class that I wrote like 2 programs in the antiquated languages that the government still uses. And you're right, nobody knows that stuff.
So it's hard to make changes. During COVID, they did some laws during tax season, and it took a while for the programmers to get it into the system correctly. Mm-hmm. And so, you're chugging along, you're filing along, and the software is not, on the IRS end, is not catching the things that it's supposed to be catching and giving you credits for what you need because it's behind.
Right.
And you have to wait for the IRS to get their piece together before your software company can get my piece together so that I can get it in and the two can talk to each other.
So
I'm not sure that the free avenue the IRS is offering, like you said, circling back, I don't know that it's good for our seniors. Right. It's probably good for my college kids, my high school kids that just have a W-2 and they need to file their, to do that. Right. It probably works really well for them.
Yeah, I would imagine so. But yeah, it's a different game, outside of that. But so let's also do, I'm curious now, so for all of our younger listeners out there, of which I'm like, there's probably 4, if sounds like one of the things we need is more CPAs. So,
yes.
As far as your role, one of the things that Roy and I joke about all the time is, there's a lot of ways in which we almost have the same job. Right. And we work with people. We're helping people out with very sensitive parts of their lives. I work with people's spiritual lives. You work with their financial lives. People tend to be private about, and we tend to work with people at emotionally vulnerable times. So we compare notes all the time. So I'm curious for you, what is it that attracted you to this work? And, it sounds, and what keeps you doing it? I mean, what would somebody look at and go, oh, like that's a part of the job I wouldn't have expected. That sounds great.
So I was attracted to the job because years ago when I was a young married person, I was doing the bookwork for my husband's business. And I wanted to know more about it. So I started at the local college and I did a little bit there. And the more I knew, the more I wanted to know. And accounting just kind of made sense to me. The debits, the credits, that whole world logically made sense to me. So it wasn't a stretch to do it. It wasn't like I had to think hard about it. So that's how I did counting. And I just kept taking more and more. And then I was like, well, do I want to be just an accountant or do I want the 4-year degree? And the professors were all like, you want the 4-year degree because, you're going to be able to work for bigger companies and earn more money and all of that. So I did end up going all the way to the end and got my CPA certificate, and I worked for firms. And when I started, I had kids at home, so I didn't want to work all year. So what appealed to me for tax season was I worked September to May, and I got off at 3 in the afternoon, so I was with my kids. So I kind of worked it around my kids' schedule, and I had the whole summer off.
Right.
So that's what appealed to me in the beginning. And now that I'm out on my own, what appeals to me is I don't have to be in the office all the time, and I can take more than 4 weeks of vacation. I do have to put in a lot of time in January through April.
Right.
You don't really have a life then. You don't go to the doctor. You don't go out to dinner. Birthday parties are a no. You just don't do anything but taxes.
That's why we might be releasing this in March. We're not recording it in March.
So if anybody knows, this is her, and
This is
time
her
of year for you.
before the fun season begins.
We'll take a before and after photo.
Yeah.
Yeah, so that's what appeals to me is that flexibility,
Yeah.
to not have to be in the office. And as a business owner, I can do it however I want. Now, I understand if you go to work for one of the big firms, they're going to find something for you to do, and they're going to work you and give you 4 weeks off.
Right.
So that's not for everybody, but
there's that entrepreneurial path if you want it. There's that ability to kind of hang out your shingle, somewhere, if you want it. And the one thing is, if you do decide to go that route and become your own kind of small business owner, you yourself will be remarkably well prepared to deal with the tax issues of becoming a small business owner.
Well,
correct.
Even in my industry, one of the areas we're seeing a need is that tax planning area.
And that's a lot of what CPAs now are going to do is they're going to go more into the consulting and the tax planning and the less of the tax prep because there's short amount of time, a lot of work, and you don't really get paid a lot.
But that's where I'm already digging into that area of someone's life.
Yeah.
So firms like me are actually hiring their own tax planner to be part of their practice, and they're avoiding the prep.
Mm-hmm.
That nobody wants to do the prep.
Nobody wants to do the prep.
Yeah.
But that's part of it. But
Nobody wants to deal with the IRS. The IRS is difficult.
No. But I imagine you do have to want to deal with people.
Yes. And I think that when you're getting your CPA license or your accounting degree, they should give you kind of some counseling therapy classes because you have, 2 people sitting across from you who sometimes need some therapy. And sometimes
I've experienced that myself, yes.
Sometimes I'm listening to things that have nothing to do with the tax world, but we have to get past those feelings and what's going on here to get to the root of what I need.
Mm-hmm.
You probably deal with a lot of the same things that Jeremy and myself deal with in reality.
Well, and that's kind of where I was going. I was wondering if that was the case.
I think you have to be a people person, and traditionally accountants aren't. We like to sit in the back room. We don't really like that contact. Just give me the books, the paper, and let me do my thing. I don't really want to see face-to-face. I know when I was training interns in my earlier life that a lot of times they say, but I don't like people. I don't want to talk to them. You talk to them, and then I'll do the tax prep work for them. But I don't really want to talk to them. I don't want to pull the information out of them. I don't want to deal with that piece. And I think that's kind of a problem with the accountants in general. Most people that have that tendencies to do accounting type work aren't really people. And so when they get out there and they discover, I have to talk to people to do this, they don't want to do it.
Well, and I wonder, though, if there's also, on the other side, there's a whole group of people that are self-selecting out because they are, right? They do want to do something social. They do want to, have something where they're actually interacting with people and doing stuff. And they're like, that's not accounting or that's not this. I'm like, well, maybe it is. I mean, because that, I made a joke earlier about, procrastinating, putting off. I didn't get the Tabor thing because I put off doing my taxes last year. Well, I'll be very honest. The reason I put off doing my taxes in 2023 is my spouse died in 2023, and I knew I was going to have to check a box that I didn't want to check, and I was going to have to deal with stuff that I didn't want to deal with. So I just dutifully filed all the stuff as they came in, and all her stuff as it came in, and then finally, one day when I was feeling emotionally strong, I, sat down and did it. But
And there's a lot of that. There's, divorces, and there's death, and there's traumatic brain injuries when you've been in an accident, and it's just all overwhelming. So it's easier to put the information into a folder. Mm-hmm. And then, I had one the other day that came in, and we had not done it for a couple years, and I was digging around and I was getting ready to file. And then I found paperwork that looked like a tax return had been filed to Colorado, but she claims she didn't file, but she got a refund from Colorado. So there's a lot of, I don't understand it, and just turning a blind eye. Mm-hmm. And you have to dig that out of people.
Yeah.
And okay, I understand this is hard. Yeah. I understand you've never done books before. Your husband always did the books, and now suddenly you're faced with doing this, and it's not easy anymore because you have all these inheritance things coming through, and you need to look at those. So yeah, you have to kind of understand people and be able to talk to them.
Yeah. Well, and maybe and for people who are interested in that. I don't want to turn this into a commercial for becoming a CPA, but maybe that's the
we
little.
We could use more CPAs, though.
We could. I think it's just what I'm hearing, and I always learn a tremendous amount when we do these. But what I'm hearing is the job isn't exactly how I would have thought of it. In terms of, dealing with folks and all of that. And I think the seasonality of it is interesting. I mean, if you happen to be married to a school teacher, that's a very similar seasonality to it. And, I one of the benefits in my life now is, since my new wife is also a pastor, we both have the same kind of flexibility in our schedule. And that's a real gift. I mean, it's just that lets you do stuff. So there's a lifestyle component to it as well.
Yes. The seasonality of it, I don't like in March, because I'm always I just need a couple more months. But I really like it in May through December. So it's really only 3 months of the year I'm miserable.
Which in Colorado is a great time to be that's when you want seasonality too. You want to be free in May through September. That's a great time. There's nothing unless you ski, there's nothing to do here in March anyway. It's
right. You might as well be inside.
So what I'm hearing you say is, if you're in the market for a new CPA, May through December is a much more realistic time to do those conversations and interview, and realize that the CPA is interviewing you just as much as you're interviewing them.
Right.
At this point in the career arc for a lot of these CPAs.
That time of year, I'm a lot more friendly, and I'm willing to listen to your story and help you out. And I'm a lot more willing to say, yeah, sure, come on board. I'm just a single practice, so there's just so many hours in a day, and I have so many tax returns I can get done in that time frame. And so I am selective about who I let into that, so that I don't cheat anybody from my time during that busy tax season. But my people that don't mind extensions, they get more of my time. Right. And I probably do a better job when I do your tax return May through October, because I have more time to think about it and be I wonder if this rule applies. Whereas in March, I'm literally just trying to crank it and get it out the door.
So one last question that I had, as we were just talking about, are there common mistakes you see? So say I get a CPA and I've decided to do that, and I find somebody's willing to work for me and everything. When I come to the meeting where we're gonna talk about this in that kind of time frame, are there consistent mistakes you see people make, either failing to bring something, or is there things that we can be doing to prep to make the most out of the time that we get with you or whoever it is in those kind of, especially in those January to March busy times?
It's really how do we stay organized?
Yeah,
and become organized.
Always bring me the prior tax return, because that's a basis for me to start asking questions. Okay. I can see what you did last year. This year is usually similar. And so you've got all those things you did last year, and you're aware of the changes you made. Like, I changed my job. I now am involved in a 401k. What do I do here? I bought a rental. What the heck do I do with that? Where does that go? What do you need from me? It's just a really good place for me to start, flip through, ask questions from what you did the prior year. And then you answer my questions, and you'll say something, and I'll be like, oh, I need that information for this year.
Right. Okay.
So always bring that document.
Yep. Yep. And one of the things that, I document all that stuff for my clients already, right? Like I know where every penny's at. So a lot of times I can print a sheet, almost like a balance sheet, if you will, of everything so that they can make sure and take it and make sure their CPA is aware of everything so that they're not going in there and forgetting to tell them something.
Right.
Because my more complex people have a lot of moving parts.
Right.
And that's one of the things that's easy to forget. So for my really complex clients, I even encourage them to do a team meeting, usually in the fall, and you get their CPA.
Yep.
And you get myself and you get their attorney typically, and even potentially their insurance provider, because we're looking at risk of all forms and we want to make sure we're covered in all areas.
Right.
So that's one of the things that I try to do. And again, it's just about getting everybody on the same page, because the first step is what I'm hearing from you is get on the same page with your client.
Yes. And I like that fall meeting, but I also like one in the spring, like after tax season, so we can go in depth over what you did last year and how you could have made some changes. And then in the fall, I can check to see, did you? In May, I can say, if you fully funded your 401k, or if you started a SEP or a simple or one of these things, this is the amount of money I'd like you to pay. I can give you those ideas in May. In October, I can follow up with you and say, well, did you? Because if you did, this is what your tax is going to look like for this year. And if you didn't, well, we're back here and it's going to look like this.
Right.
Or, do they consider a donor advised fund? Being that we're in a church at this moment, and we like donations. There's donor advised funds that people use to kind of mitigate risk, or tax on their personal side.
Donor advised funds, using your RMDs to do charitable contributions is always a good one as well. And this is kind of RMD season, so it's nice to say, when people say I don't need that money, well, let's donate it and reduce your tax.
Yep.
Yeah. Yeah, absolutely. Absolutely. I know we have people here who do that, and it's one of those things you're just like, well, every year this happens. We're kind of taking it on faith it's going to happen again this year. I mean, people's
take it on
change.
faith anyways.
We take everything on faith around here. So.
That's the way it works.
Yeah. Well, and I think, part of maybe we danced around it a little bit in this whole thing, but I mean, part of the reason for working, with somebody like yourself and that really knows what they're doing on the tax world is that a lot of probably more money than we'd like to think is we're sending out in the form of taxes. Like it gets taken out of our paycheck, so you maybe don't. It's just a number on there. You're not really paying attention to it, that kind of thing. But it doesn't take much savings. Percentage wise of what we're spending on taxes every year for the fee you're going to pay. To have a professional do your taxes to make that worthwhile.
Right. And it's always nice to know ahead of time what tax bracket you're in, because if you're on that line, maybe you could do some things to reduce your tax situation so that you're not in the 32% bracket. We can get you down to the 24%.
Right.
So you like to do a little bit more planning with your clients? Kind of what I'm hearing from you.
I like to have a little bit more chat with them. I can encourage them usually to do that fall one. My business owners will come in and we'll be like, okay, your business made X amount. Maybe you need to buy a truck or a vehicle or equipment, or maybe we need to bonus the employees. We have that whole conversation. Less with just the individuals. Individuals tend to think it's just something they have to do with the IRS, and there's not a lot they can do.
Right. Good. Well, as always, I'm learning a ton. So
this is why we talk about tax a lot, right? It's not about how much you make, it's how much you keep.
Right.
And taxes are a big part of that equation. And we want to make good decisions and be educated. And, within the rules are there, but let's play the rules to our advantage, not to the government's advantage, right?
Exactly.
Right.
Exactly. Well, Leasa, this has been great. I think, can you give us the name of the business and the website again, if you got it?
Oh, sure. It's NoCo CPAs, and the website is nococpas.com.
Oh, nice. Ooh, you did good. Yeah.
And your email address is?
Leasa, Leasa, at nococpas.com.
Fantastic.
That's a great job, by the way, on that one. I like that name, too.
Yeah, that's a good one. Kind of says what it is. So
easy. I like to keep it easy, short and simple.
Yep.
All right. So,
do you have any last tidbits to make sure we offer people before we sign off?
Other than the procrastination.
Don't procrastinate.
And procrastination is different in the tax world. You know, a month isn't usually, most people think they're thinking ahead when they do something a month before it's due. And that's really not.
No.
And being willing to pay a lot of money for it to be done does not necessarily mean you're going to get anywhere with people, because they're so busy and they actually get really annoyed by that.
I do get annoyed to be bribed. But I'm not, like in October, if you get your extension and you have until October 15th, I'm a little bit annoyed if you wait until October 1st, because, well, then you really don't remember what you did last year.
Like, where you been? So
then I ask you questions and you're like, I don't know. That was a year and a half ago. Okay, don't procrastinate.
So be organized, be on time, work ahead, and if you have found a good CPA to work with, be grateful, because apparently it's only going to get harder.
Keep them happy, send them food during tax season. Right?
Yeah.
Like, there's little things you can do.
Yeah.
Think about that.
Yeah. Bring treats when you come to your meeting.
That's right.
You guys laugh, but some people do. I'm always amazed when somebody brings in cookies or brownies, or there's one lady that sews me little goodies every year. She brings them in, those little soup bowl holder things. I'm just
always appreciated.
It's always like, oh, I remember you when you bring me gifts.
You go to the top of the pile.
So-and-so is there. Right. I love it. Well, thank you for joining us. Like I said,
well, thanks for having me.
Our episodes when we have guests are always some of our best, and I think this is an important topic that no doubt we'll have to come back to at some point as well. But yeah, this is the kind of thing that we do here on the About podcast, everything financial planning, and your personal financial life. Don't forget to check us out on the About podcast, on all the social media. Share this. If this episode was good for you, it's probably good for somebody else. So please take a minute, text it, share it with your friend. However it is you are finding us, help others find us. That would be really great.
Yeah, thanks, everybody.
Thanks again.
Thanks.
CWA is a Securities and Exchange Registered Investment Advisor. No content contained herein should be construed as an offer for investment advice or an offer for the purchase or sale of any security, insurance, or other investment product. Investments involve the risk of low loss, including loss of principal. Please consult with a qualified financial, tax, or legal professional before implementing any strategy presented here. Data presented here are obtained from believed reliable sources but cannot be guaranteed as to completeness or accuracy.